Good afternoon, all my good friends. We have already declared the results for the quarter. You would have seen that the company has recorded an improved sales number as compared to last year. However, the sales number as compared to the previous quarter will look lower. This is primarily because while the decorative segment has improved sales, the industrial segment has not been able to keep pace, particularly with respect to last quarter. In the first quarter, our sales of industrial was pretty good, and in the second quarter, both because of the slowdown as well as because of the rainy season, the sales in the industrial segment have gone down. So as you know, we are catering both to industrial as well as decorative segment. Industrial corresponds to around 30-35% and decorative accounts for around 70%. While overall year on year we grew by about 35% in terms of volumes. In the industrial, the growth was around 1%. On the other hand, in decorative, our growth was around 47% in this quarter, which is quite impressive. Within this 47%, if you observe, then the growth we have a special segment known as the putty segment, where our growth has been almost 4 times as compared to last year. That's because of the special systems we have been handling in. Now, putty is an entry segment material in the paint industry, and the growth here obviously plays an important role in generating sustainable sales in the months to come. On the EBITDA front, this is the second quarter we have been again able to maintain break-even in EBITDA terms, and now our goal is to go in for cash positive. Towards that end, we are both increasing our sales as well as our gross margins. We are happy to inform you that we are getting very good response from all the regions, but our 2 regions, basically North and East, are giving us very good results. Also, if you remember, we have been trying for past few months to start our plant at Nasik, which have caught fire some time back. So I am again happy to inform you that we have been able to establish this plant in a record time within the scheduled process which we had planned. We had planned to start the plant within 9 months. We started the construction of the plant somewhere in October-November last year, and we were able to start the trial production in the month of July, and commercial production after all the clearances from September itself. So for us, it was both a good milestone achieved as well as a record of sorts. With these few opening remarks, I will now request all of you to please have your questions so that me and my team can answer them. Thank you so much.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star, then 1. Participants who would like to ask questions, please press star, then 1. Anyone who wishes to ask questions, please press star, then 1. The first question is from the line of Meher Irani, an individual investor. Please go ahead.
My name is Meher Irani. I'm an investment advisor. I followed Shalimar Paints for the last many years, and I'm aware of the fact that the company had met with its own accidents in terms of fire to plants and working on restarting the plant. It is nice to know that at least the Nasik plant has already started and commercial production has also started. Now, if I look at the trend over the last 2, 3, 4 quarters, the company is showing a distinct improvement and possibly going back to what they had achieved maybe 4 years ago. Now, my question to you is simple, that while the volume sales have shown a distinct improvement in the quarter just ended, the sales in terms of rupees is not showing the same type of growth. You mentioned industrial paints is 1% growth and decorative paints has shown a fantastic growth of 47%. But how does one account for it? Is it that the company is aggressively trying to regain its market share by trying to win over vendors and offering some cuts here and there to possibly get back its market share?
Thank you for your question. So let me divide your question into 3 parts. So first, industrial is concerned, our price per liter of paint almost remains the same level as it was in the first quarter. However, our volumes in the second quarter have not been able to keep pace. Our volumes for industrial paints has been about 25% less as compared to the first quarter. And the same is also reflected in the value. Value-wise also, as compared to the first quarter, sequential quarter, our value is 23% down. So if you see, both are 1:1 relationship. Now, so far as decorative is concerned, so there are 2 parts to the story. One is putty, which we normally buy from outside. One is our own paint. So if I see our own paint, our growth in quarter on quarter has been around 12% as compared to last year, against an industry average growth of around 8 to 9%. So we have been able to grow much faster than the industry so far as decorative paint is concerned, other than putty. In putty, we had put some special emphasis because putty is an entry-level thing for paint industry. And by putting that entry-level thing, we have been able to grow around 400%, 4 times. If we see the value-wise again, the value-wise growth in case of non-putty paints for decorative industry again is 13%, which basically means that in paint segment in decorative also our price has been almost in line with the previous quarter or traditional prices, historical prices. So in both the cases, you will observe that our prices are keeping constant so far as paint is concerned. The minor difference which you see is because of the higher emphasis on putty. That's why in our presentation we have shown very clearly that non-putty paints are growing by around 12-13%. 47% what you are seeing is not exactly the right reflection, but that includes putty as well. So I am not including putty at all. I am taking without putty, the growth is 12%. Industry has been growing in this quarter over quarter previous year around 8 to 9%. So our growth has been slightly marginally higher than the industry. In industrial segment, the industry has been coming down, and that is again reflected in us also. In industrial segment, as compared to last year, we had achieved only 1% growth. And so for the industry is concerned, industry has been almost at par. There has not been any growth in the industry per se.
Mr. Irani, do you have any further questions?
Yeah, I've got one more question, sir. This is regarding the fact that since I have seen the heydays of Shalimar Paint some years ago, I again want to ask that looking at the way the company is progressing over the last 3-4 quarters and making all sorts of attempts to possibly deleverage its balance sheet, they made the rights issue, there was a preferential allotment. The balance sheet is getting a lot of comfort right now. Can one expect some forward-looking statement like stating that an 80-85 crores turnover per quarter which the company has achieved, can we possibly look to a turnover of, say, 400 crores for the entire year, say, in 2020-21?
2021 will be much more than 500 crores, so 400 crores is definitely what we will be looking forward to crossing it. In the current year, our sales is already around 167 crores till now, and hopefully year ending sales at the current rate, it's itself should be of the order of, for the fourth quarter sales, we are targeting to be around 100 crore plus. So hopefully within this current year, we should be somewhere near the figures which you are talking of. Next year, that is 2021, we will be looking for a sales of more than 500 crores.
Okay. Thank you. Thank you.
Thank you. A reminder to the participants, to ask a question, please press star, then 1. The next question is from the line of Ashil Shah, an individual investor. Please go ahead.
Hi, sir. I had one question. When it comes to last quarter, you all were looking at around 95 CR sales of this quarter. Would the main reason be relating to the slowdown on the industrial side, which is why you didn't meet that target?
What you're saying is right. See, if you see our presentation, our gross sales, excluding discounts, has been around 89.8 crores. And while the decorative segment, the value has been around 62-63 crores, the industrial only 27 crores. Now, first quarter, our industrial value was around 35 crores. So even if we had maintained the first quarter volumes of 35 crores, or we might have declined marginally, even then we would have crossed 95 crores. So I think the sudden slowdown in the industrial segment overall throughout the country what has affected us most.
Okay, thank you. Also had another question regarding the debtor days and the creditor days. If I believe correctly, the strategy going forward that you all had, one of the strategies that you all were looking at was to extend some debtor days in order to get more of a market share or have some sales there. Is that strategy going to remain going forward? Because from what I understand, I think there would be a little bit of a cash constraint on your part in case that strategy is continuing.
No, we are not extending the credit days for either industrial or for decorative segments. In fact, the attempt is, see, in current economic environment, any extension of credit days is having its own challenges. So our number of debtor days which we are currently having is going to be contained within that number. In fact, hopefully we will reduce it further, not increase it.
Okay, thank you. Also had one last question. Is there any sort of guidance going forward for the coming quarter or the quarter after that? Or I know year-end you mentioned that you were looking to cross 400, but are you expecting a sort of pickup post the rainy season on the industrial side or something?
Industrial side, I think the worst is behind us now. For both so far as rainy season is concerned, that's also over. And as you know, our basic customer is in the DI pipe segment, which have normally a bad period within the rainy season. And secondly, the industrial activity is also slowly, hopefully picking up, and that will also give us a boost. So on both the occasions, we hope to do better on the industrial front. And so also on decorative, our materials are getting established with the consumers more and more now. So we expect our momentum to be kept in the decorative and significantly improve in industrial. So volume should definitely pick up, and our attempt is this 2 quarters we have gone EBITDA plus, and next 2 quarters we are hoping that one of the quarters we should be able to do some kind of a interest coverage as well.
Got it. So you are expecting to be cash positive by next quarter, if not next quarter?
Yes.
Okay, thank you.
Thank you. Participants, to ask a question, please press star, then 1. The next question is from the line of Hiten Buricha from Joinder Capital. Please go ahead.
Hi, sir. Good evening. So just want to know what is the capex we have incurred for first half and what is the guidance for H2 and for the next year?
First half we have incurred a capex of around 50 crores for establishment of Nashik. This includes the expenditure which was incurred in the previous year for the same project. Other than that, we do not have any plans for any significant capex except for maintenance capex of around 2 to 3 crores.
250 crores next year, right?
No, this year itself. Next year we are not at this moment having any significant capex plans.
Okay. And sir, as you guided, you are looking for a revenue of 500 crores next year, like FY21. So
we are looking for much more than that. I'm talking about the base minimum figure. Minimum figure should be anywhere between 500 to 600 crores.
Okay, yeah. And what are the margins we are looking like? Any guidance on margin front?
I think it's a bit premature for me to talk about it. So maybe in couple of months the position will be much more clear. Our target would be next year to have an EBITDA level of 7 to 8% definitely, if not more.
Next year, 7 to 8% in FY21, if I'm not wrong.
Yeah, that's what we should be looking at, yes.
Okay. And one more thing, sir. You were mentioning in your opening remarks something, the comments related to plant. May I know which plant you were talking about?
So we have already two plants which are functioning, which one is in Secunderabad, that is near Delhi, and the second is in Chennai. In addition to that, we used to have one plant in Nashik which got burnt in 2016. We have rebuilt it. Nashik is in Maharashtra, near to Bombay. We have rebuilt it and made it operational in September 2019.
Okay. So you told the production started in September, right? In Nashik?
Yes, please. Yeah.
Okay. That was helpful, sir. Thank you.
Thank you. The next question is from the line of Dharvesh Gupta, an individual investor. Please go ahead.
Sir, in terms of your cost structure, how much is fixed and how much is variable? So if I have to look at your employee expense and other expenses, how much is roughly variable and how much is fixed?
So, you see, currently, around 75% of my expenditure is variable, which is on two fronts. One is you have raw material, packing material, and freight. And rest all is a fixed expenditure. Fixed expenditure normally per annum comes to around 100 crores. So my target is that this margin of 25 to 30% should be able to take care of my fixed expense of around 100 crores per annum.
So, sir, in H1, for example, your employee expense and other expenses 54 odd crores.
Yes.
55 crores. So,
yes.
If I annualize it, it becomes 110 crores. So, you are
yes.
saying most of these employee and other expenses are fixed.
So, this also includes around, out of 55 crores, you also have around 15 crores of freight included in this, which I have taken in the variable portion. So around 40 crores out of this is fixed.
So then in annual case, it will be 80 odd crores is fixed.
80 plus, I think interest you might not have taken. Interest will be another...
Interest not taken, sir. I'm just employee and other expenses.
Other than interest, it will be less than 80 crores.
Okay. So around 75 crore fixed expenses?
Yeah, 75, in between 75 to 80 crore, yes.
Understood. And secondly, in terms of debt position now, where are we and what is the plan for that?
Our total debt as on date is around 130 crores, including fixed term loans as well as some facility we have on our vendor financing. Total 130 crores. Out of which most of it is in the form of a CC limit for working capital, and only about 16 crore is a fixed term loan.
Okay, so most of it is working capital loan.
Yes.
Okay, and we are paying how much rate of interest, sir?
Rate of interest at the moment is a bit on a higher side. I think on an average our rate of interest will come around 13.5%.
How much? 15?
13.5%.
13.5%. So are there any plans to reduce it?
Yeah, our request for reduction of interest rate is already pending with State Bank of India, and they already forwarded to their head office. Hopefully by this month end we should be getting some good news.
Now in terms of your production capacity, sir, how much is, what is the total capacities and where are we in terms of utilization?
So, in terms of present capacity, I can produce around anywhere between 60 to 65 crores per month. And as you see, my current production is only around 30 crores. So, overall basis, I am hardly at 50-55% of my total capacity.
So you are saying that against a sales of around 80 crores, you can get 150 crores of sales from the present.
I can get around 160 to 170 crore, yes.
That includes Nashik also, sir, right?
That includes Nashik also, yes.
So now with Nashik there, we are 50%.
Yes.
So on your margin side, so one is, of course, as we sell more, we will get operating leverage because of the fixed cost.
Yes, you are right.
And
Yeah.
other than that, what are the levers that will help us to increase margins? Pricing can be one.
So second thing will be my cost of my raw material. So currently, because of my limited volumes, my raw material is a bit expensive. If we are able to increase our volume, my raw material cost also will come down. So hopefully on both the fronts I will gain. My operating cost will come down, and secondly my raw material prices. So my fixed cost will be distributed over the larger volumes, and my raw material cost also will come down. Both will help me in going in for a cash profit situation.
But will pricing also help, sir? And how do we compare with our competitors? Can we increase the prices from current level? Are we giving more discounts? What is basically the lever on the pricing front? And if you can also explain, what is contributing to this above industry growth rate?
So our pricing on an average will be around 3 to 4% lower than the industry average. And that's the price we have to pay for an entry. As you know, we were out of the market for a pretty long time, and it's only last couple of months that we have started re-entering the market, and this is the price we have to pay for re-entering. But once the volume starts coming, then obviously this price will be reducing gradually. So we hope that while this is actually, if you see, this is the first year when we have come up, we got the money of the right issue only in the month of January. So this is the first year when we have come to the market in a full-fledged manner. So by next year, if volumes becoming better, our discount we are giving to the industry or to the market prices will also come down. Currently, we are giving 3 to 4%.
So the 3 to 4% will be compared to the leader?
Compared to the leaders like Asian and Berger.
Okay. And the other question which I had asked, sir, if you can, so for example, H1 growth has been 27% for you in paint. So this is of course much higher than the market. While for Q1 you have said you have grown by 2-3% more, but if I take H1, I think H1, I don't know the industry figure, but I'm guessing your growth is more than 10% than the industry. So what has been the factor here, sir?
So I think that it has a lot to do with the base factor. So last year I didn't have any money to even go for the market. Constraints of working capital were there. So those are the factors which have helped me. Even this is not exactly the very comfortable situation. I have a long way to go before we can really do something, but we are getting good response. So the growth which you are seeing much higher than the industry average is both because we are entering the market in a big way, we are being quite aggressive in the market, and slowly we are getting acceptance, and also because the last year the base was quite low.
Okay. But any particular reason why we are getting a very good response compared to?
Because what is happening is our brand name is known in the market. So because Shalimar is a well-known brand name, people are aware of it, so acceptance comes. Hitherto the problem was either it was not available or there was an issue of quality or there were other issues with the brand. Now that we are resolving the issues, the customers are coming back to us. And secondly, we do give, as I mentioned to you, 2 to 3% higher margins to our dealers, and that is good enough for some of them to come back.
So that 2-3%, because the other brand names are also very well established and known. So I was just guessing if from a customer's point of view, 2-3% is good enough for them to, rather than going for the leader, go for Shalimar paints.
You see what happens is, in any industry for that matter, an additional margin of 2 to 4% makes a lot of difference, particularly to a dealer or a distributor, because the industry per se is always competitive. So well-known brand, they don't make too much of a margin. While in a not so well brand, even if they get 3-4% extra, it makes something for them. And also we are launching so many schemes for both dealer and painters. I think this is one difference we are making. Every now and then we are coming up with new schemes. And for one reason or other, painters or the dealers, they try to come for that.
Okay, sir. Sir, if you can also comment on the working capital of yours versus the competitors, and where do we aspire to be going forward?
My competitors are of two. I can put them in two buckets. One is people like Asian Paints, who are not giving much of a credit in the market. I think their average credit days will not be more than 10 days. The other are other players like you have Nerolac and you have British Paint and Nippon and all that. They typically operate at around 45 to 50 days cycle. So I think I am closer to the second group, and my credit days in the market range from 50 to 60 days.
That is on the creditor side, and anything on the vendor side?
So this is on debtor side, sorry. So this is on the debtor side. On creditor side, I think we are following the industry practice. Industry normally works on 90 days payment basis, and we are working on the same payment basis.
Okay, 90 days working pay, so same. Okay, so roughly you are, sir, 40 days net, 50 yes. minus 90.
Yeah.
And right. On the inventory side, sir?
On the?
Inventory side?
Inventory side, we are almost at par with the industry. The industry, again, I will talk of the, other than the leader of Asian Paint. Asian Paint, of course, is a highly systematic company. Other companies normally work on around 50 to 60 days of inventory, and our inventory levels are also on the similar lines.
Okay. So mostly our working capital is not that.
No, so there are two types of inventory here. What I was telling you was the finished good inventory. When you see our total inventory, you will also see raw material. People typically work on 30 to 40 days of raw material inventory, and we also having around 45 days of raw material inventory. So I think on both sides, raw material and finished goods, I won't say we are as efficient as the industry on an average, but we are very close to that.
And I guess we are having our internal plans to improve in these aspects.
We are improving every day. You see, for anything to recover fully, it takes time. So we are on the recovery path. Perhaps 6 months, 8 months down the line, our inventory levels will be at par with the industry average.
Okay. Sir, if you can comment something on any external talent that we have hired from the industry to go on this journey.
We have taken a senior leadership team from all industries, and I think today we have got a very good team already formed. It has taken us around 6 to 8 months to form the team. Obviously, I can't tell you from where we have taken pitch the people, but we have taken from the industry mainly, yes.
Okay. All the best, sir.
Thank you.
Thank you. The next question is from the line of Govind Sabu from India Nivesh PMS. Please go ahead.
Good evening, sir. Sir, couple of questions. One regarding the Nashik plant. So when exactly did it started operations? Was it in the fag end of the quarter, September sometime? Hello?
The plant was made operational somewhere in June, July. However, we are waiting for the environmental clearance, which we got in August, and the plant started commercial production in September. Okay. From September onward, the plant has started picking up production. October also we had good production, and now of course, November onward, it will be a pretty good level of production will continue.
So, can we expect this ramp up to continue, to optimize in the Q4?
Yeah, ramp up is continue, and Q4 we should be above 50% capacity utilization.
Okay. Sir, my second question was regarding our cash flow position. So we have almost utilized our cash which was raised in the right issue. in terms of making all the required capex, making the plants ready for production, and also funding the working capital, since a lot of creditors and other bank payments were outstanding, so we have cleared all of them. So I just wanted to understand that the working capital requirement, I know that there is not much of capex, but whatever marginal capex plus the working capital requirement for the future growth, how are we planning to fund that, and how much would it be for next, let's say, 18 months or so?
So currently our working capital total banking system, including LC and all that, is around 170 to 180 crores. Now this is sufficient to take us to a level of around 600 crores of turnover. We are expecting payments of our insurance business of around anywhere between 40 to 50 crores in next 3 to 4 months. In fact, first tranche of 18 crores we are expecting this month itself, and another 222 to 30 crores maybe in 3-4 months. So that costs close to around 800 crores. Close to around 800 crores. Close to around 800 crores. So our current working capital is, I should say, in line to handle up to 600 to 800. However, if need be, then we will try to look if the need for additional working capital arises. As and when it arises, we will see if we can need to augment it. But currently, it doesn't look like that we will need one.
Okay, good, sir. Regarding the capex, so is the capex behind us, or is there any further capex which would be required? With a very minor capex, I can increase this capacity so that I can achieve a turnover of 1,000 crores per annum. So I'm just looking at that is hardly 4 or 5 crores I have to make, because basic facilities I have already created. I have to just get one machine and install it. So that's why I'm not looking for a very big capex. Currently, as you know, my turnover is not even 400 crores. So if my capacity is already sufficient to take me to 1,000 crores, I don't need any major capex. So, like in the first 6 months, we have done a capex of 25 crores. So does that mean that most of the capex is behind us?
Yes, except for 2-3 crores, most of the capex is behind us.
Great, sir. Sir, my one on the business side, I had one question. Maybe I just joined just a little late, so maybe you have to repeat it. So most of our volume growth is coming from the low value putty item. So can you just, how is the supply chain and other things organizing for us to get a growth on the high value items like decorative and industrial paints? In paints and industrial paints.
So let me divide my whole product segment into 3 parts. One is putty, one is our normal decorative paints, third is the industrial paints. So if I see my figures for H1 as a whole, not only for a quarter as a whole, then my main business, being decorative paint, grew by around 27% over last year. Of course, last year was not a very good year to start with, but whatever it was. And if I see quarter on quarter, my growth was 13%. So if I see industry average, which is around 8-9% in paint industry, for the decorative segment, I have grown by 13%. Again, if I see industrial segment, year on year it was 43%. But if I see quarter on quarter, it was hardly 5%. Again, if you see the industrial average, it's not more than 2 to 3%. So I am almost in line with the industry average. Putty, we have outgrown everybody else, but that's hardly a thing because it's a low value item, and we had given some special schemes just to make sure that our entry into the main paint market becomes easier. So putty is more like an entry strategy, but both in paint, in decorative paint as well as industrial paint, if I even see quarter on quarter, we have grown by 13% and 5% in value terms.
And in volume terms, sir, industrial paints was just a function, degrowth in industrial paints, which was around 25%, was just a matter of seasonality, or is there some other function or other variable which is also working around it?
There are 2 variables we have here. One, of course, main is the seasonality, and the second is the slight slowdown in the industries, particularly in steel industry. Now, a lot of our industrial paints goes to steel industry, mainly pipes. And pipes, our steel industry has been facing some kind of a slowdown. particularly in the material going for oil and gas sector. So normally it is observed that July-September is a low quarter for that.
Okay.
That's why when we see year on year, even in volume terms, we see 1% growth despite the slowdown.
Okay. Good. Thank you, sir. Thank you so much.
Thank you. Participants, to ask a question, please press star, then 1. The next question is from the line of Mehra Irani, an individual investor. Please go ahead.
Yes, sorry, I'm got one more question to ask you. I had asked certain questions earlier, and I think if I put all of them together, your answers, I think there is reason for being very optimistic on my part. So I just want to reconfirm that. According to me, I think the company ran into major working capital problems because of the mishaps at Nasik, where the fire took place and all. I believe that most of the problems are now behind us. Even the working capital problem has been largely taken care of, at least as of now, with the rights issue and the preferential allotment made. You also mentioned interest cost. Hopefully we'll get some good news coming from SBI, hopefully by the end of this month. Also, the interest cost on the whole, even otherwise, should be coming down with some money being mobilized to the rights issue, and the working capital problem may be behind us. Fourth thing is your Nasik plant commercial production has already restarted. Also, in decorative segments, you have done exceptionally well. So if I put all these 5 points together and asked you my question earlier, you also suggested that 400 crores may happen in the next 12 months' time instead of the next 2 years, which I was asking you. So all this sounds very great. Now, if I go back to Shalimar Paints, which I've been observing for the last maybe 10 years, I remember the numbers which you announced somewhere in 2010, 11, 12, where your turnover was somewhere around 500 crores and your bottom line was something exceptionally good. Now, post the rights issue, the preferential allotment, and maybe the fact that the share is having a face value of 2 rupees today, can one expect the earnings to be somewhere closer to the double-digit levels over the next 3 years?
You're talking of EBITDA margins?
No, I'm honestly referring straight to the bottom line because I mentioned that the interest cost should be coming down. The turnover should be around 500 crores, you mentioned, over the next 18 months to 24 months. So over the next 3 years, you also somewhere, to some earlier question, you mentioned that even an 800,000 crores is possible and you don't require too much of expansion to achieve that. Is it really practically possible over the next 3.5 years? And if I compare this back to the margins which you enjoyed 7, 8 years ago, can we look at a very healthy bottom line, say, somewhere in 2021-22, say, over the next 2.5 years?
Definitely. That is something which has to be, which is already planned for and which will be achieved. In fact, our growth would have been still better, but for the unforeseen situation which happened in the economy from time to time. So, as I was mentioning some time back, fortunately for us, the acceptance of the brand name has been a bit better than what we were expecting. That is what is helping us in achieving the volumes. And you are totally right. We are also quite optimistic about our growth and our numbers. And you would have seen that whatever we had indicated 2 or 3 quarters earlier, all those figures are almost online. There are definitely marginal slippages, but they are very marginal. So we were planning to have a value of around 95 crores in the Q2, and we are at around 89 crores in gross terms. So we have got some slippages, yes, but they are not too high. And in days to come also, we hope to to achieve whatever we have been planning for. So I think the real taste of the pudding will come in Q3 and Q4 when we are trying to go in for a cash positive. The moment we reach cash positive, then from there onward, it's all green light.
Okay, thank you very much. Thank you, sir. All the best.
Thank you. The next question is from the line of Govind Sabu from India Nivesh PMS. Please go ahead.
Sir, couple of maintenance questions. One was regarding the visibility of insurance claims. So, at what stage and is it visible? Is it passed, and what is the status of that?
so we had 3 insurance claims, one in Havda and 2 at Nasik. So the one at Havda has already been cleared and we have received the money. However, we are asking for some additional money for which we have gone for arbitration. I cannot say that we will get anything out of it, but still we have gone for that. So I am not taking that into account at this moment. There are 2 other claims, both relating to Nasik. One is the loss of profit claim and second is the claim for the destruction of our factory. The first claim of loss of profit has already gone to the head office. It is now going to the committee and the surveyor has recommended a claim of around 18 crores to us. We are hoping we should be getting this 18 plus crores within next 1 month. We recently met the chairman of United India also and he promised that within next 1 month your claim should be settled unless until there is something which is lacking. The second claim for the destruction of the factory was to be paid only once the factory starts commercial production again. So factory has started the commercial production. The surveyor has already done the survey. It started only last month, that is September. Surveyor has already done the survey and now the whole process of survey report and subsequent things will start. In my view, it should take at least 6 months for our claim to be settled. While we have made a claim of more than 40-50 crores, I don't expect them to pay anything more than 20-25 crores on that. Incidentally, they have already made us a payment of 11 crores as an advance earlier. So over and above that, even they pay us around 20-25 crores, that should be good enough.
Good, sir, good. And just secondly, regarding the new tax rate which has come in, so prudently, have we decided on what are we going to follow what tax rate we are going to follow going forward?
I think I'll be in a better position to answer this question in our next call because we will definitely go in for the new tax rate, but that decision is still to be taken by us depending on our balance sheet and all that. We will be going for the new tax rate as the whole industry is going for that, but I'll be able to say with a certainty only perhaps after a couple of months.
But we have some brought forward losses and everything which would be allowable. I just wanted to inquire.
That's why I'm not able to answer it because my legal team is reviewing it from all angles, from short term, long term, and all that.
Yes.
So face of it looks attractive to go in for the new rates, but till we take a very decisive part on it, I don't want to comment on it.
Okay, sir. Thank you, sir.
Thank you. Participants, to ask a question, please press star, then 1. The next question is from the line of Dharvesh Gupta, an individual investor. Please go ahead.
Sir, you had also mentioned in the presentation about one marketing campaign. So if you can highlight some more details about the same, what is the advertising and marketing strategy for the company and what did you gain out of this recent exercise and what medium are you going to follow? And specifically, I think at least your larger competitors are doing a lot of marketing. And I think the percentage of time they are on TV has increased significantly as others have taken down on the ad growth. So how do you feel about this entire thing, sir?
Yes, you are right. We have taken up a small campaign. So currently we have a limitation in terms of budget available for branding and for marketing activities. So we are trying to work out something which is possible through a low budget strategy. So primarily we have gone for digital medium, we have gone for outdoor medium, and which is basically hoardings, and we have gone for a FM radio medium. And as you are aware, TVC is a very expensive medium. So, and what we have done is, in case we have gone for a regular advertisement, the impact would not have been much because of the, as you rightly said, large expenditure by our competitors. So we have gone for a controversial campaign whereby people will just recall that yes, Shalimar used to be a brand. We are not trying to prove a point. If you want to prove a point, the expenditure will be very high, and currently we can't afford it. So we are being prudent, we are being slow. Our strategy was just to remind people that yes, Shalimar is back, Shalimar is visible, Shalimar is there. And I think in that strategy we have been partially successful. People today, they are seeing that Shalimar is back. I think once we have some money in our pockets, we will start working on what is known as a product marketing or on a attribute marketing. So that is another 6 months down the line.
Okay, but from the attribute marketing perspective, which you rightly pointed out, because when you are small, then there is some differentiation that you have to create in your product. Now, one is, of course, this dealer push where you said you are offering 3-4% discount, more discount than others. But any additional way in which you are able to differentiate your product or either through distribution or from the consumer side or through any other initiative?
You are right that we have to differentiate ourselves in some way so that we can reach the consumer, and that's what we are trying to do. So within the complete product basket of our competitors, we are trying to find out gaps. We are finding gaps both in terms of the product availability and in terms of the offering, in terms of the branding, in terms of marketing. So whatever volume growth you are seeing is only because of the gaps we are able to identify and pitch in there. So we found certain gaps in emulsions, we found certain gaps in enamels, we found certain gaps in the basic entry level product, and this is where we have tried to pitch in. And so far as branding and marketing or communication is concerned, we are targeting at our painters. So targeting a common consumer would have been a very expensive affair, which we at this moment can't afford. But specifically focusing on painter was possible, and that's what we have done. So we have over 20,000 painters who are on our app, and we target those 20,000 painters through our app. Plus we have other means of targeting them. We run special schemes for them through which they read our messages and they try to connect to us. Apart from the normal digital and OH or hoardings which we try to go for. So our basic idea is to find out the gaps, give schemes to fill in those gaps, and target the painters.
And the other point was, in this trade practice, now because of the slowdown, liquidity challenges and all that, so what has been our experience in terms of working capital being stretched, or are you seeing more defaults or anything of that sort? What has been the experience, sir?
You are quite right that because of the credit squeeze in general, getting payment is becoming difficult day by day. So we changed our track slightly. We are being more prudent in selecting our customers. And so what we have observed is that a customer or a buyer ultimately pays, and he pays to at least 75 to 80% of his suppliers. And we try to force the issue so that at least we are one of the 75% suppliers. So we are, the only way we have for getting our payments out is very close and constant follow-up. This is what we have been adopting, and I am happy to inform you that our collections till now in this year has been almost in line with our sales. So we have been able to collect whatever amount we have sold till now.
Mr. Gupta, do you have any further questions? Mr. Gupta has left the queue. We take the next question from the line of Govind Sabu from India Nivesh PMS. Please go ahead.
Sir, since our Nasik plant has now started and about 32% of our sale is from West and South India combined, so do we see any savings on logistics cost? Or it's a separate product profile, and I mean we'll not be able to save anything.
The product basket of all the three plants is significantly identical. So the same products are made at each other plant. So we will definitely get some saving from Nashik.
Okay. And in percentage terms, can you quantify something?
So currently my total logistic cost, my supply chain cost is around 8%, and on an overall basis I hope to reduce it by at least 0.5% because Nashik has come. So I am targeting anywhere between 7 to 7.5% going forward.
Okay. And sir, lastly, I would like to ask that since the steel pipe industry, has it picked up, or any guidance for Q3, Q4? What are you seeing? Because economic environment as such is quite subdued now also, industrial side.
See, what is happening is that there is a demand which is pent-up demand. So, and in last couple of months, a lot of destocking has taken place. So we do observe a demand picking up in the steel pipe industry. So we see that demand is slowly creeping up, and as it is, the months of November to March are normally very good months for this industry, for the entire industrial segment, particularly for the steel pipe industry. So I think the demand will pick up, and you will be seeing it as the growth, the way we have seen in Deco segment, a similar kind of growth coming up in the industrial also in coming months.
Okay. Any guidance you would like to give for next 2 quarters?
So I will say that we are targeting to maintain our growth rate, and we have reached a level of EBITDA plus. Now let us see if next quarter, that is Q4, we are able to reach cash plus.
Thank you, sir. Thank you so much.
Thank you. The next question is from the line of Saurabh Ginodia from Stewart & Mackertich. Please go ahead.
Hello. Thank you for the opportunity, sir. Just wanted to understand on the growth outlook going forward, whether the growth will be driven more in terms of distribution expansion, or you are expecting more throughput of business from your existing stock dealers.
So far as industrial segment is concerned, we are looking at growth from additional customers. So what is happening in each industrial segment, whether it is oil and gas, or it is DI pipes, or a dealer segment, or power segment, we are catering to only some 15-20% of the total number of available customers. So we hope to increase this customer base by going in for more customers in the same segment. On the second side is that so far as Deco is concerned, we will have both. We will have some more customers, but we expect our existing customers also to increase their volumes per month.
Okay. And are you expecting the growth coming from the urban market, or you are expecting the growth coming from the rural segment?
Our focus has always been on Tier 2, Tier 3 cities, in fact Tier 4 cities. So I think for us the growth will come mostly from Tier 2 to Tier 3 cities.
Okay. And also wanted to understand on the gross margin bit, is there any scope for further improvement in the gross margin from internal efficiencies?
So currently our gross margin, after taking care of raw material and packing material cost is around 32 to 32.5%. I think it will inch towards 34% in next 2 quarters.
34%.
Yeah.
Okay. And in your entire intention of having a top line of 1,000 crores over the next 3 to 4 years, what are the kind of challenges do you expect as a management in terms of execution to reach this goal?
I think the basic challenge which we are going to have is convincing our customers of the faith they used to have in Shalimar, regain that faith, and acquiring those customers. And of course, the biggest challenge I think which the economy as a whole will be facing is the cash crunch. So in case the cash crunch, we hopefully government will resolve in next few months is resolved, then it's only question of acquiring new customers.
Okay. Thank you, sir. All the best.
Thank you. The next question is from the line of Hiten Buricha from Jointer Capital. Please go ahead.
Hi, sir. Thanks for the follow-up question.
Sir, just want to understand, like, we are looking for a top line of, let's say, more than 500 crore in, let's say, next couple of years. So just want to understand the strategy behind that, like what kind of strategy are we following? Are we looking for a new entry in the new market, or like we are looking for more market share? Let's say we have a strong presence in North. Can you throw some light on that?
So you see, we have two parts to the industry. One is the decorative, and second is the industrial. So talking of industrial, in each of the segments we work in, we basically supply them protective coatings, which protects the base from the corrosion. And this could be oil and gas industry, this could be power industry, this could be pipe industry, or for that matter marine industry. So in each segment we are hardly knowing or supplying to hardly 20% of the customers. So our first strategy will be, since 20% customers are taking material from us and they are satisfied, they are happy about it, why not cater to more customers in the same segment? That's first strategy we are adopting. That should enable us to almost double or more than double our sales to industrial segment. The first thing. Second thing is on deco side. Our products are very well established. We have got a very good basket of products. Now the need is that painters should become more and more aware of it. So our second strategy is to catch hold of these painters and force them to try our paint. So I'm happy to inform you that the number of painters who try our paint is doubling every quarter. So if there were, let us say, 100 painters who were trying our paint in the month of June, then by September it has doubled. So every quarter we hope to double that number by using some or other methods of enticing the painters. So these are the two factors we are working on. One is more customers in each segment, and second is painters.
So do we have any particular target these painters? Like, do we have team to like catch these painters? How does this process work, sir?
So painters, as you know, they will be very happier after their client becomes happier after they apply the paint. So first thing is quality, and I am happy to share with you that our quality is almost at par with the industry leaders. Second part is painters will be happy if they can get some incentive to use Shalimar paints. So this is where we are working. Incidentally, all the companies, they give some incentive to the painter, and we are trying to give delta plus. If the other companies are giving X, we try to give X plus delta. So that's what we look at, giving them slightly higher incentive for using our paint. Thirdly, we are having more and more painters meet. So we are trying to make sure that each and every painter we meet at least once in 3 months. And fourthly, we give some kind of a special campaigns in selected areas, so that in those areas at those times those painters become interested. That's how we try to get more painters online. So as I mentioned, our number of painters who are working with us is doubling every 3 months.
And sir, can you quantify like what number of percentage of revenue we will be spending on our marketing and advertisement expenses?
So if we observe, the industry normally spends anywhere between 6 to 7% on advertisement and branding and marketing activities. However, since our funds are limited, our expenditure on these activities may not be more than 1.5 to 2%.
1.5 to 2% as of revenue, right?
Yeah.
Okay. That was helpful, sir. Thank you.
Thank you. Participants, to ask a question, please press star, then 1. Participants, to ask a question, please press star, then 1. Participants, to ask a question, please press star, then 1. As there are no further questions from the participants, I would now like to hand the conference over to Mr. Ashok Gupta for closing comments.
I must thank everyone for participation, particularly such a late hour. I am sorry for that the conference has been kept to such a late hour on a working day. Next time onwards, we will try to make sure that the conference is at a more reasonable level. Thank you for your participation.